Hello traders, and welcome to this video in which we will discuss the ES strategy. The ES strategy consists of the volatility levels and the ES plan. The volatility levels are very precise algo-generated levels that can be used for entering long and short trades, and the ES plan defines where we will be looking for longs and where we will be looking for shorts. The entries at the volatility levels are always at a distance of 1 point maximum from the level, with a stop of 2 points and the target the immediate level in the direction of the trade. So for example, we see here that the index was coming down from the pivot down to the lower yellow level. This meant that as soon as the index approached at a distance of 1 point at 50.41, we could have start opening longs down to the actual level, which is at 50.42. The stop would have been 2 points below. This means at 50.40, and the target was the next level above in the direction of the trade, which is the pivot at 57.25. As we see here, the lower yellow level gave a nice reaction up to 54.25, which was pretty close to the pivot. Traders, of course, don't wait for the immediate level from above to take the whole profit. As the index moves into the direction of the trade, it's good to scale out from the longs that they have entered down to the lower yellow level. If the index comes down to the lower yellow level and continues down at a distance of 2.25 points. So if the index goes down at 50.42.0 minus 2.25 points, that means if it tags 50.39.75, which is what happened here, that means that the level has broken. In this case, we reverse direction. We are looking for shorts at the hits of the level from below. We can start sorting at a distance of maximum 1 point from the level. That means that we can start sorting at 50.41 up to the level at 50.42, with again a stop of 2 points above the level at 50.44, and the target again is the immediate level in the direction of the trade, which is the support 1 at 50.23.25. The index, as we see here, gave a nice move down to 50.28, which is 40 points, a pretty nice run. Traders, of course, as we said before, don't wait to take the full profit at the volatility level below. As the index moves in the direction of the trade, they look to scale out from trades. So this is how the volatility levels are used in order to open long and short trades, but when we should be looking for longs and where we should be looking for shorts. This is defined by the ES plan, and the ES plan tells us that below the lower yellow level we are looking for shorts, above the lower yellow level we are looking for longs. That means that below 50.42 we are looking to short the hits of the levels from below. As we see here, the index came down and then it pulled back to the level. This was a short. Again, it moved down, pulled back to the level. This was another short. And the target is the immediate level below, which is support 1. When the index comes down to this level, we are not allowed to take a long trade because we are in a bear territory. And in a bear territory, we are not allowed to take direct hits from above of the support volatility levels for long trades. We are only allowed to take long trades if this level breaks to the downside. That means that if the index goes below this level at a distance of 2.25 points, this means it needs to tag 50.21 and then breaks back above this level again, tagging 50.25.50, 2.5 points again above the level, and then we are allowed to take a trade at the pullback of maximum 1 point from support 1. That means in this case we will be allowed to take a trade at 50.24.25 down to the level at 50.23.25, we stop 2 points below the level at 50.21.25. The target, of course, will be the immediate volatility level above, which is the lower yellow level, and the direct hit from below will again be a short. So in bear territory, we are only allowed to take shorts at the direct hits of the levels from below. We are not allowed to take longs at the direct hits of the levels from above, only if the levels break, if the index breaks below one level and then breaks above the level again, confirming a false breakdown, then we can take a pullback to this level as a long. If the index is in bull territory, so if the index is above the lower yellow level at 50.42.0 in the case of this chart, then we are looking only to take longs at the direct hits of the levels from above. As we see here, the index went up to the pivot. This wasn't a short because it's a direct hit of the level from below, and then pulled back to the lower yellow level, and this is a direct hit from above, and since we are in bull territory, we were allowed to take a long and target again the pivot. As with the case of the bear territory, in the same manner, when we are in bull territory, we are allowed to take shorts only at the false breakouts. That means that if the index goes above pivot, above 57.25, that means 2.25 points above, if it touches 59.50, and then breaks back again below the level, it touches 2.25 points below, that means 55.0, then we are allowed to take a short trade at the pullback at the distance of maximum 1 point from the level, starting from 56.25 all the way to 57.25. We stop 2 points above the level at 55.25. And then the target will be again the lower yellow level, where we will be able to take a long because we are in a bull territory, and this is the direct hit from above of the level. So the ES plan says us that the dividing line between the bull and the bear is the lower yellow level. Above the lower yellow level, it's a bull. Below the lower yellow level, it's a bear. When we are in bull territory, we are looking for longs at the hits of the levels from above. And we are in short, in bear territory, we are looking for shorts at the hits of the levels from below. We are allowed to take shorts at the false breakouts in bull territory, and we are allowed to take longs at the false breakdowns in bear territory. No shorts at the direct hits from below of the levels in bull territory. No longs at the direct hits of the volatility levels in bear territory. Only false breakdowns. So this was in short the ES strategy. It's a pretty straightforward way to trade the ES and the NQ future markets. It is very profitable, very precise, and it is with the less risk that someone can have trading these instruments. So that was it about this video. I hope you enjoyed it. If you have any questions, you can message me at Twitter or in the service if you are a member.